Today, I want to talk about a couple different tax strategies you can use when you're post-closing. Maybe you're in the process of buying your first practice. You just closed on your first practice. A couple different tax tips I want to give you today that you can utilize post-ownership. One of the great things of owning a practice, and we talk about this quite often, is the tax plays and tax strategies that open up from being a new practice owner. One of the benefits of being a business owner, owning your own dental practice, is opening up these different tax saving tips for you. So I'm going to dive in here. First one is taking the entity that is set up that owns or that is your dental practice. So whether that's your old LLC that you had as an associate, new entity you formed to buy the practice you're just buying, or you're currently forming that entity, electing S Corp status on that entity. When you elect S Corp status, opens up a wide range of different tax strategies and tax plays that you're going to be able to run through that entity. Going to minimize on self-employment tax. A lot of different levers you can pull to minimize taxes when it comes to April 15th of the next year. So one of the strategies we often advise our clients to take. Second is taking advantage of a home office. You now own a practice. You may do some work from home, do some clinical work in the practice itself. Opening up that home office deduction not only saves some tax liability when it comes time to file, but also opens up the door for you to take more advantage of business mileage. Think about it. You have your home office at home. You practice clinical dentistry in your practice. When that strategy is opened up, you're now driving from your home office to your practice and back and forth, so on. This opens up not only, like I said, the deduction of taking that home office square footage and whatnot, also opens up the opportunity to take some auto deductions on that tax return as well. So something to think about there. Last piece of advice in this area: think about and look at your current retirement plans, current insurance plans as a new practice owner, a new officer of the entity. I want to make sure that you are maximizing those retirement plans, insurance plans. Make sure you're working with your current CPA on getting the biggest benefit or biggest bang for your buck in those when it comes time for tax time. This does not mean you want to go blow out a bunch of cash you do not have to minimize taxes. Want to keep a healthy balance of a healthy cash flow, healthy tax minimizing strategy. So guys, as always, if you have any questions, feel free to contact us. Fill out a work together form, duckettladd.com. Would love to hear from you. Love to have a conversation with you. We'll see you soon.